Good morning, traders. Richard Jacobs here, and welcome to this week's edition of the Underdog Weekly Perspectives Report, where we essentially reflect on what's been happening in the market over the past week and take some views and throw around some ideas around where we see things moving in the days and weeks ahead. Last week we had a bit of an abbreviated week with as we headed into the Easter weekend. And this week is pretty much going to be something of the same flavor, as we've got a bit of a short week. In fact, in the month of April, you'll find that we actually have quite a significant reduction in the number of trading days because of all the public holidays and how they're structured and staggered. And with a lot of people taking time off, putting together vacation packages, etc., you're actually going to find, or what we anticipate, is that there's, the month of April is going to be actually quite muted in terms of the volume of market activity. But having said that, let's look at where we are at the moment. And if you recall from last week's report, what I have up on the screen is the daily chart of the top 40, which is where we generally start our analysis. And if you recall from last week's analysis, what we've been looking at was this price structure resistance level over here, and the market pushing up into it. And we anticipated that there would be, this would act as a resistance level, and if there was some kind of a reversal out of that level, we could see the market starting to consolidate from there. As we stand now, as we put into the end of last week, what had happened was the market pushed up, actually pushed right through that level. We had a breakout to the upside, but that proved to be a bit of a false breakout, as on, I think this was Thursday, the market put in essentially put in quite a this was Wednesday. The market basically broke the upside, false breakout, and put in a long wicked candle on the day. And then on Thursday, as we headed into the weekend, we had this small little, I suppose you could call it a bearish candle, but not quite a reversal off that level as yet. But what this structure is telling us here is, and if you look at it in conjunction with the stochastic oscillator, which has crossed over its signal line to the downside and is coming off those overbought conditions, it does point to the potential for further downside or consolidation playing out. Now, if that were to be the case, and we see the market starting to retrace today, today being Tuesday the 18th of April, I'm recording this just as the trading session is opening. If we start to see that playing out, we can expect some form of consolidation or retracement. Where do we expect the market to go to? Well, what I've marked up on the charts here is the Fibonacci retracement of this leg of the move here. And I've marked up the 23.6 level, 382 level, 50, and the 61.8. And all of those could legitimately be regarded as potential areas the market could find support at. Because you see, if it does a and this is the very shallow retracement just back into this 23.6 level over here, it essentially means that the market is really, we are in a bullish move here with this break to the upside, and the market really wants to continue to the upside. So a really shallow retracement would be a pullback to this 23.6, which comes in around about the 46.400, 46.500 level at the bottom of this price structure resistance zone over here. The next level we'd look to would be the 38.2, which has some, not a hell of a lot, but it's got some price structure, if you're looking left on the charts over there, that could provide some support for an upside move. Also, it comes in around about that 46,000 level over here. So that round number could also provide support. That's actually where we think that maybe a healthy consolidation or retracement, a healthy bullish retracement could pull back into is that 46,000 level over there. And then, looking beyond that, if the market were to retrace even deeper, you can see this between this 50 and 61.8 level. We've got this previous price structure over here, which could act as support. And again, the market could find support at this level before continuing its move to the upside. So the message here is that yes, we're seeing some consolidation playing out or potentially playing out, but we're still in quite a bullish uptrend at the moment. So there are multiple levels where this market could find support and then continue to the upside, and one just needs to monitor that, maybe drilling down to a lower time frame if you're going to be trading on the intraday charts, to see where those levels line up and use that potentially in your trade setups and analysis. Because what we also have to remember is within the context of the bigger picture being this, we just zoom out a bit over here and look at this move where the market broke to the upside, put in this complex retracement, and then broke out of this this falling price channel over here to the upside. If we do a projection, let me just see if I can get this right. Click the parallel line. We do a projection of where we anticipate this market could move to, just based on this breakout out of this falling price structure. We could easily see the market push up to that 48,000 level. You also recall that what we did was we did a Fibonacci, I think it was Fibonacci projection of this leg of the move here, and we said something like the 127 projection level. Let's just get that in. Add in my 127 projection level. Comes in also around that 48,000 level. So really what we were saying then is this zone over here, if you were shooting for longer term targets, would be an area that one could look for the market to move to, just based on the price structure. So really what we're looking for now is we're looking for this retracement, and to be honest, in a sense, the deeper the retracement, the more powerful the move to the upside, because one could get a better reward to risk if you wanted to get involved in a long side trade here by waiting for the market to pull back and then continue to the upside towards that 48,000 level. So that's just something to eyeball in the days ahead, as we move through the shortened weeks into the month end. That could be something that we will look at. If one looks at the volatility, nothing. And again, that's, I suppose, expected given what I said earlier in terms of the muted levels of volume being traded in the markets. April being a shortened month, you can actually see that the normalized ATR is actually continuing to drop off to the downside here. In fact, if you look at where, I think this was Thursday, sorry. That we haven't seen that low and normalized ATR since, wow, let's go back all the way to May 2015. So very, very muted from a volatility perspective, which makes intraday trading that much more difficult to negotiate. So that's what's happening on the price structure front. If we do the switch over to our, let me just load the right templates over here. We're going to have a look at some of the other markets. First one we're looking at is USD Rand, and as you can see here, nothing's much changed on the weekly. We've still got the strengthening trend. We've had this deep retracement, which has been playing out over the past few weeks. If we look at the daily, daily is quite interesting, because what's happened on the daily is here you've got that deep retracement happening, but we haven't actually seen the break of structure to the upside in terms of the rand weakening beyond that 14.13, 14.20 level over there. Instead, what we're seeing is we've actually been seeing a strengthening continuation move to the downside, which, if you start throwing fundamentals into it, you start questioning, can that really be the case? But there's so much floating around, so much uncertainty floating around in terms of the political climate in South Africa. We like to trade what we see, and what we're seeing at the moment is that the rand is remaining in this strengthening trend, and one could start looking for a move down to that 1240 level if this trend manages to hold. Alternatively, if we saw that if the market from this point started to weaken again, and we saw a break beyond that 1391 level at this stage. That to us would be quite rand bearish. So again, these are this is what we are keeping our eye on from a rand perspective. But at the moment, the strengthening rand is pointing to continued downside in terms of our top 40. If we look at the US, you know, the weekly, pretty much nothing's changed, strengthening. On the daily, we had this retracement which has been playing out over the past, call it few weeks really. It's been quite a shallow and slow retracement, but it has been coming. And then yesterday we actually had a continuation move to the upside. So at the moment, at least of the daily and weekly charts, what we're seeing is that the S&P is continuing to rally, and this would point to potential upside in terms of what's happening on the on our local top 40 as well. Looking over at gold, just from a risk perspective, again you can see gold broke to the upside, retraced, continued to the upside on the weekly, so it's just continuing to the upside, continuing to strengthen. Also on the daily, last week we noticed that this level here we said was acting as quite strong resistance, and what happened was gold actually, the price actually broke through that resistance level and is pushing to the upside now. Next level we'd look to is this 13, just over, call it the 1300 even level over here. So gold is looking pretty bullish at the moment, which could be indicative of some risk off in the global markets, adding to our case for further downside on our local market. And finally, the last market we look at is oil, and here you can see oil's been in a nice bullish move on the after breaking to the upside on the weeklies, although it's in retracement on the weeklies. On the daily, you can see this upside continuing as it makes higher highs and higher lows, and it's now looking towards that $57 level to continue its bullish move. So what you have here is you've got some mixed signals in terms of a bullish oil price. S&P is still looking bullish, although one could drill down to some of the lower time frames and look at where the market's moving in that space. Gold is indicative of further risk off, which would indicate downside, and there is a strengthening trend in the rand which could support the downside level over there. So as I said, a bit of a mixed bag, but if we combine that with our price structure analysis, it does still say to us, our interpretation of it is that we should see some consolidation being the favored call it bias over the days ahead, and maybe some kind of a pullback. And as I said, what we are call it predicting, anticipating, is that we will see a pullback towards that 46,000 level at least on or the 38.2 retracement level. So that's what we're keeping an eye on, guys, in the week ahead. As always, as you trade, be safe, be cautious, adopt the right risk management principles. And that's it, pretty much it for this week. If you guys want to drop me a line, ask me any questions, please don't hesitate to do that. It's richard@underdoginvestments.co.za, or pop over to our website www.underdoginvestments.co.za and check out some of the other free material we have there, as well as some of the services we do provide if you want additional support in terms of your trading. Guys, have a profitable and good trading week, and I shall speak to you next week. Cheers.